Hello, fellow investors, and welcome back to Borex Investing. Well, for today's video, I want to talk about the next wave of IPOs. With all the recent excitement around SpaceX and private market investing, a lot of attention is now shifting towards the AI companies that could potentially go public over the next 1 to 2 years. So we're talking names like Anthropic, OpenAI, and other names generating a lot of investor interest. So I just want to share my thoughts on which of these companies I would actually consider buying, which ones I would avoid, and which one might be the most attractive AI IPO of them all. So let's jump in. And if you're new here, welcome. This channel focuses on high quality analysis on AI and tech stocks, backed by my 20 years of professional experience in finance and risk management. So if you follow names like Nebius, Palantir, or NVIDIA, you are in the right place. Now, before we profile the 5 companies I have selected for this analysis, let me just say that typically investing in IPOs is not historically a great move. There's typical hype, FOMO buying, and euphoria, which causes people to pile in and overpay for these names. We're kind of seeing it now with SpaceX, a company with 100x sales ratio valued in the trillions, which does not have the really revenue to back up the valuation at this moment. You tune into CNBC and you hear people saying this company will be worth over 20 trillion in the future, and it creates hype. Time will tell, but for now we are seeing SpaceX really way down from its highs earlier this month. SpaceX was ultra hyped because of Elon, so I would say it was an abnormal case. If you take a look at a company like Cerebras Systems, this thing was 385 when it IPO'd on May 14th, and it swung in 1 month from 385 down to 195. So that was a 50% discount within a month of IPOing. And there was really no major news, no earnings releases, no guidance change, just all based on hype. And let me just say this, I like this company, Cerebras Systems, a lot. I may invest in it. They seem to have a solid business case here and they have gauged my interest, but I still want to wait. Why? Well, I have guidelines for investing, and these guidelines have worked pretty well for me. I had 80% returns in 2023, 2024, 2025, and I'm up almost 40% year to date this year, even though Palantir, one of my major holdings, is absolutely getting hammered right now. But my framework looks at 6 factors for potential investments: product advantage, tailwinds, execution, moat, financials, and risk awareness. It's very hard for me to judge a company on execution and financials right after they IPO. I want to listen to a earnings call or two, listen to their management team, how do they conduct themselves, and just see how the CFO discusses their financials. Also, just in general, how do they conduct their earnings call? This is all very important and hard to do before an earnings cycle, and this is why I often tend to pass on IPOs initially. So let's just get that straight out there. For me, typically going right away at an IPO and buying something is too risky because you are often overpaying for that hype premium. But that being said, you can still follow and watch these companies closely, do your due diligence, and then invest in these names when the time is right and that hype has calmed down. So let's start with the biggest name out there, Anthropic. Anthropic develops the Claude family of AI models, and unlike OpenAI, Anthropic has really become heavily focused on enterprise AI and coding agents. So if OpenAI is trying to become the AI operating system for consumers, Anthropic is increasingly becoming the AI operating system for businesses. Claude is now widely used for software development, research, legal analysis, financial analysis, and enterprise workflows. Anthropic recently raised capital at a roughly 965 billion valuation and has reportedly filed for an IPO. So the bull case here is very strong. This is probably the AI IPO that most people are excited about. And why? I mean, it's simple. Enterprise customers pay real money. Enterprise AI spending is just beginning. Claude is arguably the strongest coding model today, and it just seems like Anthropic appears to be more focused than OpenAI at this moment. So, the biggest thesis is that Anthropic really becomes the AWS of AI reasoning. The company right now is generating enormous cash flow. About 85% of its revenue originates from enterprise and developer segments. More than 1,000 customers spend over $1 million annually. So Anthropic's annualized revenue run rate reached approximately 47 billion in May 2026. There is a bear case as well here. The valuation could approach 1 trillion before IPO, and that's ridiculously high. There's also some government scrutiny that appears to be increasing. And obviously, model leadership is changing constantly, and there's tons of competition out there. And OpenAI, Google, or XAI, and future open source models could eventually erode their margins. But regardless, I will try to buy Anthropic at some point. This is the AI IPO I would be most interesting accumulating long term. The enterprise scalability here will likely continue to grow, but this might be hyped similar to SpaceX, and we may see FOMO investors piling into this name initially. Right now, the reason I hold my Amazon position is because they have a roughly 20% stake in Anthropic. So if you are bullish about getting Anthropic early, buying shares of Amazon is a way to do so. Amazon holds a nice stake with its early investments of 8 billion swelling into paper gains now worth over 70 billion by mid 2026. And just last April, Amazon expanded its strategic partnership with an additional 5 billion investment with the potential to invest up to 20 billion more tied to commercial milestones. So they're definitely growing. And also, Anthropic CEO Dario tends to really express himself more humanely than some of the others, I would say, in this field. And he constantly brings up the risks that these models bring up to white collar workers. So it's like he's giving us all a fair warning. And he has said in interviews that this will bring a lot of economic progress long term, but it can also cause a lot of inequality. So he's being very realistic about the threats that AI can pose to the labor market. And then one thing I just have to say is that, I do have a finance background professionally, but I know a good amount of programmers, computer scientists, and other tech people, and they all love Anthropic models and prefer it to other names. And that really should tell you something. So I do think this will be one of the winners of the AI race long term, and that they will steal market share from some of the legacy software names we know of now. So, enterprise adoption is the key here. All right, let's move on to OpenAI. So, obviously, everybody knows ChatGPT. So, OpenAI effectively created the modern AI revolution and remains the strongest, I would say, AI consumer brand on earth. Their current private valuations are approaching in the 1 trillion range, depending on funding structure. And they have a pretty solid bull case if you think about it. Since they are the strongest AI brand globally, they have a massive distribution advantage, and they're really trying to become a platform. This could give them super app capabilities that can see them really become like the Google of AI assistants. But there is a strong bear case here, and I think this is where I differ from many investors. I feel like OpenAI is a phenomenal company that may become a mediocre stock because it seems they are the consumer preferred choice, but not the enterprise solution. That valuation is already enormous. They have massive compute costs. They have a constant need for capital. And there's a lot of competition from names like Anthropic, Google, XAI, Meta, and open source models. So I likely will not buy OpenAI. And it's not because I dislike the product. I think it's clear ChatGPT is the preferred LLM of consumers, but that's where I see the problem. If OpenAI really wants to scale with beefy revenue, they need tons of enterprise customers, and it seems like Anthropic will actually be the leader there. One thing we should remember is that a few years ago, Palantir CEO Alex Karp said he thought LLMs would be commoditized in the future, and we're kind of already seeing it now. The reason is that LLMs pretty much all use the same internet to train their data and get their output. And even a platform like Palantir, which uses different LLMs, allows you to easily swap what LLM an enterprise uses. So it can go from ChatGPT to Claude to Grok to DeepSeek, Llama, whatever you want. Even with Nebius Token Factory, you can choose whichever model you want. So I think less in the future will be focused on the actual models. And let's step back and just talk revenue for a minute. OpenAI generated 13 billion in revenue for 2025 and have a 2026 run rate revenue of about 25 billion. Now compare that to Anthropic, which is double the revenue, yet both have a roughly $1 trillion valuation. OpenAI CEO Sam Altman has been questioned about their relatively low revenue to valuation figures in the past, and his arrogant response is typically, oh, don't invest, others will. Not sure I like that style. I mean, imagine you're dating someone and ask them a question about a bad or unhealthy habit they have. And their response is instead of accepting the criticism and working on that bad habit, all they say is, well, fine, don't date me then. There's tons of others who will. I mean, that's essentially the same type of response. It's not very mature. And we have to remember a CEO is part of the investment thesis. I listen to earnings calls obsessively because leadership quality matters more than most investors realize. And this is a very basic, low effort question about their low revenue to valuation, and he couldn't really give an actual answer. It's not going to go well down the line when they have thousands of investors tuning into earnings calls with actual, serious, difficult questions about their financials. So, anyways, I do think Anthropic is the better company here between the two, but we will eventually see how this plays out when both go public. All right, next company on the list is Databricks, and this is arguably one of the most important AI infrastructure companies that most retail investors have never heard of. So, when you think of enterprise data, data lakes, AI training pipelines, analytics, and machine learning infrastructure, Databricks is one of the leaders. And the reason why it's because many companies cannot even deploy AI until a company like Databricks organizes their data first. So their current private valuation discussions are around 180 billion, and the bull case is pretty simple. I mean, this is a company that sells picks and shovels. Every enterprise wants AI, but a lot of these enterprises have terrible data, and Databricks helps solve that problem. The company is growing rapidly and has become one of the dominant AI infrastructure platforms, I would say. There's obviously a bear case here. They already have a large valuation already. There's competition from names like Snowflake and ClickHouse, and there eventually will be more competition from hyperscalers. And there's even a thesis that AI will eventually reduce some data engineering workloads, so we'll have to see. So my verdict here is that I'm likely not buying, but I'm leaving the door open. If pricing is reasonable, this could become one of the most important AI infrastructure investments available to retail investors. Databricks reached an annualized revenue run rate of 6.9 billion as of June 2026, driven by an 80% year-over-year growth trajectory. That is impressive, and I generally would be excited about that. But the next company on the list, I feel, has the better product. And that name is ClickHouse. So this is a name I have profiled here numerous times as they are partially owned by my highest conviction holding, Nebius. So ClickHouse is an ultra-fast analytics database. It powers observability, AI applications, real-time analytics, monitoring systems, and large-scale data processing. ClickHouse currently serves over 4,000 customers globally across enterprise, AI, tech, and media sectors, and they are primarily used by data-heavy and AI-driven organizations requiring lightning-fast real-time analytics at petabyte scales. Some major companies and brands that rely on ClickHouse include Meta, Tesla, Cursor, Bloomberg, Capital One, Cisco, Sony Pictures, Cloudflare, and China Telecom. So that's a very impressive list of names. So this is also one of the hidden engines powering modern AI infrastructure. ClickHouse recently reached a roughly $15 billion valuation and has been openly discussing a path towards a future IPO. And the bull case here is pretty strong. They have revenue growth that has been explosive. They have a lot of strong AI tailwinds. Apparently, developers love their product and they're really becoming a serious infrastructure player. But obviously, there is a bear case here. The database market is very competitive. I mean, with names like Databricks, Snowflake, and even cloud native alternatives. But my verdict here is as a heavily invested Nebius shareholder, I already have exposure to ClickHouse as they have a 25% stake in the company. Nebius and ClickHouse operate in adjacent parts of the AI infrastructure stack. So if Nebius continues executing, I don't necessarily need to own both, but I will eventually likely want both if the valuation on ClickHouse is right. In 2026, ClickHouse surpassed 250 million in annualized run rate revenue, which is more than tripling its business year over year. The company also crossed the 4,000 customer mark, growing from 3,000 in January 2026. and is anticipating revenue to reach the high nine digits by the end of the year. So this might be a very impressive name once they eventually go public. All right, last but not least, this last company is a very interesting one, ElevenLabs. It's a Polish company founded by an ex-Palantir employee. So ElevenLabs is actually the global leader in AI voice generation. So they create AI voice cloning, voice agents, audiobook narration, translation, dubbing, and real-time speech generation. They recently reached roughly an $11 billion valuation and surpassed 500 million in ARR. I mean, this one excites me because I still feel like AI voice is very early. So if you think of future applications like AI call centers, AI assistants, video localization, gaming, content creation, or even enterprise customer support, this really looks like an enormous market opportunity. I feel like, unlike some AI products, people here immediately understand the value. Obviously, there is a bear case here with voice models may eventually becoming commoditized like LLMs. OpenAI could decide to compete, Google could compete, and margins could eventually compress. But my take here is that this is a very interesting company. It's potentially one of the most overlooked AI IPOs of the next few years. And what's great about this product is that you can actually try it for yourself, as they have a free version on their website. So I do feel that there are both consumer and enterprise opportunities here for this company, which will hopefully allow them to scale. 11 Labs surpassed 500 million in ARR in the first 4 months of 2026, and this milestone was driven by massive enterprise adoption of conversational voice agents, with the company adding over 100 million in net new ARR in the first quarter of the year alone. That explosive jump in revenue is heavily credited to businesses deploying 11 Labs AI conversational agents at scale. Major organizations can really embed these voice agents into everyday operations, such as customer support and sales, marketing operations, or even something like hiring and employee training. That's exactly what we look for here: enterprise scalability that gives that long term revenue growth and margin expansion. The company has also drawn investment from major financial and tech heavyweights such as Sequoia Capital, BlackRock, and Nvidia. And just this past week, Poland's National Development Bank invested 11 million USD in 11 Labs, which the investment aims to establish an AI development center in Poland. So it's, nice to have some government backing here too. Europe definitely needs government backing to help their AI innovations thrive, and this is a step in the right direction, in my opinion. And again, they have an interesting management team. Their founder, Mati Staniszewski, left Palantir to start 11 Labs, and this is a name I'm hoping IPOs by 2027 or 2028. I have heard they will likely do a dual listing on the NASDAQ and the Warsaw Stock Exchange, but hopefully the valuation won't be too crazy, because there isn't a lot of hype yet on this name, but clearly, as everything in life, this can potentially change. So time will tell. All right. So let me know if you're interested in any of these names, or maybe there's other potential IPOs you guys are excited about. If so, let me know in the comments. I love when you guys send me tickers. I try to research all of them. And if you are a channel member, I try to go a step further and provide a deeper analysis and more detailed responses to your questions whenever I can. So let me know. And as always, please like and subscribe if you found this useful. And if you want more Nebius and AI content in written form, I highly recommend the Top Tech AI Substack. It's run by a friend of mine and a fellow Nebius bull. I'll link it below. And just before I go, I want to say thank you to everyone who has subscribed to this channel. I started making videos about a year ago with a simple goal to just kind of create the type of investing channel that I would actually want to watch myself. I didn't want to see any paid stock promotions or hype videos telling you every stock is going to the moon. It was all about honest analysis, independent research, and a very pragmatic approach to concentrated investing. There are tons of investing channels out there, and the fact that you've chosen to spend some of your time here with me means a lot. So again, thank you for your support. Thank you for the comments, and thank you for being part of this journey with me. I genuinely appreciate it. Thanks for watching, and I will see you next time.